Okay, hello and welcome everyone. Welcome to JFD Brokers Traders Tea Time with me, Darius Anucauskas. Today's the 27th of November 2018. So, yep, welcome everyone. Welcome to this Tuesday's afternoon session where we're going to have a look at the markets, a few charts. As always, guys, yep, the usual. But before we start doing that, let's quickly have a read through our risk disclaimer. So, now, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. There's always a few seconds for you to read the rest, and we can continue. Okay, so now then, let's quickly jump into the charts. Now, the first one I want to touch on, and that's Dow Jones. Now, looking at this picture here, looking at this daily chart, as you can see, yesterday we had a nice reversal here back to the upside, managed to move back above the 24,420 level. I was talking about this one in one of my previous videos as well, and this is how it's shaping up right now. So you can see that we're not far from this little area here at around 24,715, something like that. So marked by the high of the 20th of November. So in a way, where we're gonna keep an eye on here, of course, if we're gonna get a nice pop here above this level, certainly we're gonna be very cautious still here. We're gonna aim for this level around the 24,910, 909 area, something like that, approximately there. We're gonna keep it monitoring very carefully because this is still going to be below this 200 EMA that we got here running on, as shown as the black line, and of course, for us to get more comfortable with this one, we would need to see a nice good pop above this 200 EMA, and this way we could then target levels like the 25,500 or even higher. So for now, in a way, guys, probably, even though it is showing some signs, some good signs, still we need some good confirmation breaks here above in order to kind of get at least more comfortable with higher levels. Now, what you can keep an eye on as well is this little downside resistance line taken from the peak of the 3rd of October. So you can see that we're still below that. In a way, we could maybe travel back up here to test that line, but as long as it kind of remains intact, as long as it holds the price down, then yep, I mean, probably the bears would be dictating the rules here for now. So in a way, still, it would be a bit of a long road here for the index, because just given the fact where we are right now. So first, of course, we're just gonna go step by step. Initially, we're going to aim for this nice pop here above the 24,715 area, approximately there. Then we're going to keep a close eye on the 24,910. Just slightly above that, we do have the 200 EMA. So we're going to keep a very close eye on that one, because as you can see in the past, how important that was. You can see that kind of held the price here around this area, around the 14th of November, the 15th of November. But of course, it broke it to the downside, but it required a strong gap here in order to kind of break below this line. So that's why we're going to keep a very close eye on it. So if we do get a nice close here on the daily candle, then yep, we could then target these higher levels again. So for now, be very cautious. If, let's say, this struggles to move higher here, struggles to move above the 200 EMA, you know, for us, let's say, to start considering lower levels again, we would need to see a nice good drop here below the 24,125 area, approximately there, which was marked by the lows of the 29th of October. So in a way, this is where we're going to target, of course, the psychological 24,000. But if that doesn't hold, even if that doesn't hold, then yep, further declines are possible. And the levels that we could be watching further down are the 23,530, which was marked here by the low of the 3rd of May, or even actually the 23,350 area, which was the this year's this year's lowest point. So approximately there, guys. So yep, keep your eyes on that one. But again, for us to consider these two levels here, we need to see a nice good drop here below the 24,125 level first, and of course a confirmation break below the 24,000, psychological 24,000. So jumping into Brent here now, let me just quickly jump into Brent, and looking at this picture here, you can see that looking at this daily chart, you can see that today initially, of course, we were slightly selling off here, but still didn't manage to, the Brent oil didn't manage to go as low as the Friday's low or yesterday's low. So it kind of stuck around here around the 59.55 zone. So it's kind of currently has this very small body, but it wasn't really able to kind of overcome the strongly overcome this 61 barrier. So we're going to be very careful with this one right now. And still, let me just actually jump into a 4-hour chart because it's too tight here. So what we're going to keep an eye on here is basically we need to see a nice good nice good push above the 61 level first, and then of course a confirmation push here above the 61.70 in order to consider these higher levels again. So levels like the 63.20, or even actually the 64.60, or even better this downside resistance line, this long kind of short term, of course, downside resistance line that has been running here since around 9th of October, and we could consider that a possible test of that area. But again, what we're going to keep an eye on here is we're going to probably, for a better confirmation, we'll keep a close eye on this little level here at around 61.70. Now a nice good pop above this could potentially push it further up here, at least towards the 64.60, or even, like I said, retest of this downside resistance line. So for now, be very careful. If, let's say, this reverses back down here and we'll start moving towards the last week's lows near the 59.30 level, around here. So sorry, 58.50, do apologize, guys. So the 58.50 level, if we're just going to start moving towards that, a nice good break below this could potentially open the path towards much lower levels. And the levels that I'm talking about here, now we could start looking at areas like this little low here at around 55.10 level, which was near the lows of the 6th of October 2017. So a potential good area of support, but only if we get a drop below last week's lows near the 58.50 zone. So that's quite important, guys. At the moment, it could continue maybe moving sideways here. So that's why we're going to be we're going to take a bit of a cautious approach here and just kind of wait for that confirmation break in order to kind of start examining these either lower levels here or higher levels. At least to where at least we will aim for the this short-term downside resistance line. Okay, guys, let's have a look at a few pairs now. So the EURSEK here, so the euro against the Swedish krone. Still looking at this daily chart, still this pair remains below this downside resistance line taken from the peak of the 29th of August, and you can see it's kind of currently maybe trying to push back down here. The only problem is here, looking at this daily chart, is the 200 EMA, which continues to hold the pair from pushing lower. So in a way, looking at this chart that I've got here and looking at these levels that I have marked, for us, let's say, to consider much lower levels here in the near term, probably we'll take a more conservative approach here and wait until we get a drop here below the 10.21 area, approximately there, which was the low of the 13th of November, and only then we'll consider further levels, further support areas like the this area right here at around 10.1670, something like that. But if that doesn't hold, we do have a much better one around, let me just adjust this quickly, guys, there we go, around the 10.18 10 levels. So something like that, something like this could be possible. This area could be a possible test for this pair, but only if we get a drop here below the 10.21 zone. So I do understand it's quite far away from where it is right now, but to be honest, it's better to be safe than sorry. On the upside, looking at this, of course, you probably understand that what we're going to be waiting for is a nice good pop above this downside resistance line, and of course a nice good break above the 10.35 level, approximately there, which was near the highs of the 21st of November, and only then we'll consider a possible move towards the 10.435 level, which was also marked here near the highs around the 29th of October. So yep, a very good potential area of resistance, but in order to kind of see that one, we need to get a nice good pop above this area of resistance first, the 10.35 zone. So looking at this chart, like I said, guys, for now we're going to stay put, but to be honest, we're going to keep it monitoring very closely because, as I said, it's still struggling to drop below this 200 EMA since it kind of moved back up above it again on the 19th of November. So this is going to be our quite important level to watch, quite important line to watch, let's say like that, to support those bears here. I mean, it's still below this downside resistance line, which could have, in a way, could also hold the rate from accelerating further up here. So, but then again, we could maybe see a nice strong spike here to the upside. And if we do, this is what we're going to keep an eye on, the 10.35 level. Jumping into another pair which we haven't looked for quite a while now, and that's the dollar against the Turkish lira. So keeps on moving nicely since its reversal to the downside since the end of summer, and then since the 30th of August here, it continues to travel lower. It continues to move below this downside resistance line. This line kind of nicely remains intact, and we don't even get like even a false breakout here. So in a way, this is what we're going to keep an eye on. So in order to kind of start looking at higher levels, we're going to wait for a nice good pop above this line, above this downside resistance line. Certainly we'll wait until a daily close here above this line, and only then we'll consider further higher levels, where we're going to aim for the 5.515 area approximately there, which was the high of the 13th of November and also the low of the 18th of October. And if even that doesn't hold, well, I mean, further higher levels could be possible, could be met, but then again, like I said, for now we're quite far away from there. So that's why we're gonna keep the upside scenario just on our second option. So for first, of course, as long as this downside resistance line remains intact, we're still going to aim for lower levels, and we are getting closer towards the 5.18 level here. Quite important area of support here, which was on the 7th of August, from which the pair, you can see it shot up here strongly. So this is going to be quite important level to watch, the 5.18. Just slightly below that, we do have the 200 EMA as well. This could, in a way, also stall the rate a little bit potentially, but again, if the downside momentum is going to remain strong, then further declines towards the 4.94 area, or even actually towards the 4.735, which was marked here by the lows of the 23rd of July. So keep your eyes on this one. Like I said, for now, still we are leaning more towards the downside rather than the upside, but just keep on monitoring this downside resistance line, and if we do get a nice pop above this, then I mean, we could be shifting our views towards the towards the upside again. And the last pair I wanted to quickly touch on, and that's euro dollar. Now for this one, this is a daily chart, but to be honest, it's a bit of a mess here on the daily chart, so let me just jump into a 4-hour here, and you can see that it's currently balancing around this 1.8 1.1325 area. It's kind of trying to push back above it. Certainly the day is not finished, and this 4-hour candle is still not finished yet, so it could continue to hold. This 113.25 area could continue to hold, but let's say if it doesn't, then we could see maybe this one traveling back up here towards today's highs, which were around the 113.44 level. So but for us, let's say, to get more comfortable with aiming for much higher levels here, or should I say at least higher levels for in the short run here, we need to see this nice good break above the 113.44, and only then we'll aim for the levels like, actually let me just get rid of this. This is no longer valid, this level here. What we're going to aim for is we're going to aim for this little downside resistance line taken from the 20th of November. This very short term, of course, in a way very tentative one, but nevertheless this is where the rate could potentially stall. But that's only in the scenario if we're going to get a nice pop here above the 113.44. We could see this one traveling up towards the test of this downside resistance line. But in order to kind of aim for much higher levels here, guys, we need to see this nice good break here above this downside resistance line, and then eventually a nice good break above this little high here at around 113.85 area, approximately there. So a nice good break above this 113.85 could potentially open the door towards higher levels like the 114.25, and if that doesn't hold, well, I mean, this could continue traveling further up here. So but what I wanted to show you guys here is this idea. So if we do get all these breaks here of these resistance levels, now if this gets all the way here towards the 115 level, this is where it's going to become quite interesting, because if this gets broken, if the 115 level gets broken, and if the pair continues to travel higher, this could in a way confirm an inverse head and shoulders formation. So where the 115 is going to be the neckline for this pair. So yep, guys, for now, keep your eyes on the levels here. So certainly this is a bit of a long-term kind of shot here that I'm talking about. So, you know, first, before we start considering all these higher levels, we need to see this nice good push above the 113.44 initially, and then we're, of course, a break of the downside resistance line, this very short-term tentative downside resistance line. On the downside, if let's say the 113.25 level, where the pair is currently sitting around here, if it continues, let's say, to hold, and if we see the pair reversing and dropping further down below here, what we're gonna target here, we're gonna target the 113, the almost, we can call it a psychological 113 level now, which today it was almost met. It just fell shy of reaching that level by a few pips here. So if we do get a break below the 113 level, then yep, further declines could be possible, especially aiming for the 1270 here, or even lower. So for now, be very cautious, be very careful here, and let's see how this plays out. Okay, guys, thank you very much for watching and listening, and I hope you found it useful. And if you want to join me tomorrow morning in my Traders Espresso, and that's 7 o'clock GMT time. So, but for now, I hope you have a fantastic evening. Bye for now. Bye bye.